Welcome to Unlayered, the show where we explore next generation blockchains. I'm your host, Saul, alongside my co host, Dave. And today we're joined by Kyle, CEO of Hedgehog. Kyle's been working on this project for the past few years and has an extensive background in finance, self-taught programmer, and has now dived into the world of prediction markets. And this is a very big category, an emerging category in crypto, especially in an election year, and the rise of PolyMarket, which is the juggernaut in the prediction market space. If you look at their chart of volume, they've gone kind of exponential in the last 3 months. They're getting picked up by mainstream news outlets as a source of truth, a truth machine in a way. And I think it's a really interesting category. And now we want to dive into Hedgehog, which is taking a lot of the similar approaches that PolyMarket has done, similar markets, brought it to Solana, and just talk about that space and talk about your experiences building this product. So Kyle, thanks for joining us.
Yeah, I appreciate you guys reaching out. It's great to be here, and always love talking about prediction markets.
Yeah, they're one of the most, I think, compelling uses of crypto because you can permissionlessly make a market, and essentially people put their money where their mouth is, so to speak. And oftentimes this produces insights that normally isn't captured by maybe it's media outlets that have other incentives to showcase different stories or maybe hide the truth. So I'm curious, you've been working on this actually for a while. How did you first get interested in prediction markets? I mean, they weren't always this kind of popular across mainstream, although they've been experimented with for a while now.
Yeah, so I actually happened to sort of stumble upon them. I went full time in crypto at a VC incubator, and Hedgehog was actually one of the projects that they were starting with the original founder. And so I was just kind of put onto the Hedgehog team when the project was being started as almost in like an operational role. So just kind of picking up the pieces wherever they needed me to step in. And about a year in, the founder wanted to go back and actually get his PhD, and I guess maybe just wasn't super into crypto and things like that. We were also starting to go into the bear market at the time. It was very NFT driven on Solana, and so I love the space. I was fully in on NFTs at the time, and just really enjoyed the communities. So he kind of handed it over to me, and I took the reins from there. And we tried some other things going into the bear market and not seeing a ton of DeFi activity or monetary trading per se, other than with NFTs on Solana. It was definitely tough to get going, in addition to the regulatory side of things, where there was a lot of uncertainty, and being in the US, it was kind of a pain point for us as well. And so we did try some other sort of free to play models that were still along the lines of prediction markets, and how do we collect data? How do we get data on the outcome or sentiment for things? And so we did a polling mobile app that would reward users for providing insights and data as well. And then towards the end of last year, more notably at Breakpoint, when a couple of tokens were starting to be announced, and then suddenly airdrops picked up on Solana. And now there was, TVL and volume and trading that started happening. We kind of went back to our roots, which were, classic prediction markets, and started putting up some markets in November, December, and really went heavy starting in January, and saw that there was some interest, especially going into an election year. That's sort of what happened back in 2020. And so, we've been just sort of pushing and building and iterating on new market types since then, just sort of seeing what users might want to trade, how they might want to trade, and seeing if there's other models that we can start to play around with, just because of some of the issues that you run into with classic prediction markets.
What is your take on the comparison between prediction markets and meme coins, which in some sense, they kind of serve the same purpose, but in some senses, they're mechanically very, very different. One has a binary outcome, one has kind of unlimited upside, but one has very defined parameters for what a winning case is, and the other, it's kind of just up to pop culture and what have you. How do you see regular people delineating between these two products, which I think have some overlap, but also are quite different?
Yeah, I think that prediction markets in the sense of like a binary option style, where there's sort of a resolution or an outcome, are in a way easier for non-crypto native people to also grasp, which is why you see PolyMarket getting cited for the odds of an event happening. People can kind of understand the context, they can understand the data, and they can actually like gather insights from that. Whereas if you look at like a Bowden or Tremp meme coin, it's like, okay, this is trading at 100 million market cap. What does that mean, right? Like just a static like data point of that doesn't really tell you anything about the election. And even when, like Biden drops out, is that good for a Bowden joke meme coin, or is that bad for the meme coin? And it's really up to the traders, right? If people start dumping it, I guess it's bad. So you don't actually like really know until those start trading. And so I think like the interesting thing with like classic prediction markets is that you can actually look to them to see, people that are actually putting money on the line, what do they think the implied odds of something happening are? And so you can, I guess, actually get data from them. Whereas I look at meme coins more of a trading vehicle, and you're just speculating on how can I make a profit. But you're not really able to get necessarily other insights from that other than other people agree with what I think the sentiment is, at least for this momentary like point in time.
I'd love just to rewind a little bit and go back to the history of prediction markets. Did they exist pre-crypto? It was obviously part of the Ethereum white paper. It was mentioned as one of the potential use cases. Have they existed pre-crypto? I know that there's some regulated versions as well now in the US, obviously non-crypto versions. So what's the lay of the land with prediction markets to date?
Yeah, so I guess my high level understanding was like PredictIt was one of the more non-crypto prediction markets that were available. And they kind of found a little loophole to operate within the US, at least for a period of time. And more recently, have kind of had to not allow US participation anymore. And then more recently, we've seen prediction markets with Kalshi, which is, a fully US regulated KYC type thing. So it'd be similar to setting up a brokerage account. You can set up an account with Kalshi in order to trade, various things. I believe that each market there is sort of set up as its own like futures market. So they have to get CFTC approval for each market that they put up, and that sort of situation. So it is, by the book, a little bit more cumbersome to get things up. And then as far as crypto goes, being in the Ethereum white paper, Augur, I think, is kind of one of the biggest, more well-known on-chain prediction markets. It was, obviously a little clunky. I think that's partially because my understanding is markets weren't originally denominated in USDC. And so now you have kind of like two variables at play, where you have the asset that you're using to speculate on these prediction markets changing in value on top of the markets themselves moving around. It took a while to settle. It wasn't instant. And so, it's kind of evolved from there. And then, now we obviously have PolyMarket, which is, gaining a lot of traction, and obviously Hedgehog now on Solana.
And do we know the differences, I suppose, in terms of volumes between the regulated versions and then the deregulated versions in crypto? Who's doing more volume at the moment?
Yeah, I think this is kind of hard to look into, and I think some ambiguity around this. If you look at all the platforms, they report volumes a little bit differently. So I haven't paid too much attention, but for example, if you go to Kalshi, they report it based on like, I want to say like either contracts or shares or something. And so I don't know exactly how they count it, and what the dollar value is. And then similarly with PolyMarket, I know on their site they show dollar values, but I also am not sure how they count those, because there's markets that are priced at like 0.01 cents that are doing 3.5 million in volume. And so what I've been told by other people is that their volume is actually counting every share traded as a dollar being traded. So if you think of it that way, like if you have a market where someone's trading one share, but that one share is a tenth of a penny, it's not really a dollar of volume, it's a tenth of a penny of volume. So you're inflating that dollar volume by a factor of 100. So I don't know if the dollar value is actually true on PolyMarket, but I don't know if it's not true. So I don't want to be quoted on that. That's what I've been told by other people that trade on the platform. I've never personally traded on PolyMarket, so I'm actually not sure there. But you know, when I hear people saying there was $500 million like traded on a market in 1 month, that does seem like quite a bit of money for prediction markets. Which if it is, then like that's fantastic. I would love for that to be the case, because that gives, you know, Hedgehog something to aspire to be able to drive that much volume in a single market like within a month. But I think it's just how people are counting these, because at the end of the day, if you are trading, you know, shares, if people are holding those shares and the market resolves, you can claim $1 for every share that you hold that is correct. So maybe that's how they're counting the volume. But as far as like actual like nominal value, there's a lot of I guess contention there.
Yeah, because obviously you can't assume that everyone's going to win when
Yeah.
you know, half or whatever won't. Yeah, so that makes sense.
Yeah.
And just wondering, I mean, Sal talked about it a little bit in his intro, but traditional betting sites, I know betting is illegal as far as I understand in America, but traditional betting sites, they do also predict who's going to be the winner of the elections. Is there some difference that's going on here with prediction markets compared to traditional betting markets?
I think at a high level, no, but I think it would ultimately come down to, I guess, how they're structuring it versus how like us or PolyMarket is structuring their markets. But at a high level, if there are sites that do allow that, such as through like a DraftKings or FanDuel type market, I know that there are certain markets that they are and aren't allowed to do. A lot of it has to do with like, is it a skill-based market? And that's probably dependent on the question and how the question is structured. So I think that's kind of been the biggest crux of like the regulatory side of things, especially in the US, is, you know, what markets can you actually put up? How can you structure them so it's more of a skill-based outcome rather than just like pure gambling? And then I know even if it is considered pure gambling, they might be able to do it in certain states, or like, you know, in Vegas at specific places, you might be able to place those types of bets. But at the end of the day, it does seem like most are, you know, you're effectively predicting the outcome, whether you're getting fixed odds or odds that are tradable. And I think that's kind of the differentiator with a lot of prediction markets, is that you can trade in and out of these shares. Whereas if you're, you know, taking a bet on like a DraftKings, you know, when you look at traditional sports betting, it's really like they're giving you odds and you can take that bet now. And then I know with like parlays, sometimes you can cash out or sell that position early. So I'm not sure if they offer that or have that for, you know, election markets with those more TradFi type institutions.
Yeah, because I know you can definitely cash out early, as you say, but I think as well there's the piece that the house is offering the odds in a lot of cases, certainly in the UK, rather than it just being like a market-based odds.
Let's talk a bit about Hedgehog itself. You know, how would you describe the product and perhaps differentiation versus some of the, you know, bigger players in this space?
Yeah, so right now our classic prediction markets, you know, that most people think of, where you're trading yes and no shares, and if it resolves correctly, you can claim $1 for every share. Our markets are an AMM style, and they are freely tradable up until the close date, when they are resolved. And the way we're kind of, I guess, approaching it at a high level, to take a step back, is that we are aiming to create a fully permissionless and on-chain way to create, participate, and resolve markets. So we really don't want to like have ownership of any of that flow at you know, our end goal. And so we're trying to figure that out. And those 3 steps, I'd say the biggest pain points are the creation of markets and the resolution of markets. And so what we've kind of also looked at more recently is potential other market types. So we don't necessarily want to get rid of the classic markets, which is, you know, what you would find on PolyMarket and with our AMM markets, where you can trade in and out of those yes and no shares. But these other markets that we're introducing, We're calling them pooled predictions, pooled parlays, and P2P markets. I guess they're slightly more akin to like sports betting, where you kind of have odds and you're betting at those odds, or with a pooled prediction market, it's a pari-mutuel style market, but you're depositing and you're not actively trading these markets. And the benefit here is the two cruxes that we're trying to solve for are the creation and the resolution. And so with these markets, you can easily unwind them in the sense that you can mark them invalid and people can get their money back. And the reason that this is important is because right now, the hard part with market creation, if you do follow prediction markets, there have been quite a few PolyMarket markets that have been very contentious when they've been getting resolved just due to ambiguity or how people are interpreting the resolution criteria. And so if you let just anybody create markets, you might get a lot of spam or weird markets anyways. But the other side of it is, even if people have the best intentions, they might word something in an odd way or ask a question that doesn't really make sense. They might not have all of the details that are necessary for like the resolution details. And then that causes a lot of problems when you go to resolve it. And so, the easiest way is to be able to say, well, if the question doesn't make sense or the details are unclear, if you mark it invalid and you use these like P2P or pari-mutuel style markets, people can just claim their money back and move on to the next bet. And so worst case is that the bet just doesn't actually like happen. Whereas you can't really unwind things easily with a CLOB or AMM style market that is constantly traded, because you would have to mark those to some price that people can pull money out at. And you still end up with like winners and losers because those shares have been traded and the prices have moved and the liquidity has changed. And so that's like one, I guess, approach that we're trying to take to differentiate and allow users to actually make their own markets, and be able to have, fun markets with friends or with communities, or just being able to sort of put it out for anybody to take the other side of it that wants to find it online. As well as let anybody resolve a market, so it's not reliant on ourselves.
Can you maybe step back and walk us through, like, mechanically, how does one, whether it's you guys or a user, create a market? Let's say, for instance, just take the example of the presidential election. Who's going to win, right? You need some liquidity, and then you have people taking bets on either side. Like, what are all the pieces here? Just so we can kind of make this a bit more concrete.
Yeah. So, I mean, the biggest things are, when you create any market, you have to obviously have the question, make sure that it's clear, so that people, no matter who's looking at it, there's not really any confusion or different ways that it could be interpreted. Then it's, kind of providing the details for that as well. So trying to account for any black swan type events or random things that could happen. And I guess the way we've approached that more recently is we try to bake every possible scenario into yes or no, especially for like the AMM style markets, because we don't want to resolve these to invalid. And so it's more of like, an example of this might just be if you want to bet on like, will a team win in a sports game? There could be a black swan event, such as a game gets paused halfway through, or a game doesn't happen or gets canceled. And so what we can do with the AMM style markets is we can say, if, the game doesn't get played at all, or something happens where it can't be finished, that is part of the no like side of things. So now when you're going to participate in that market, the key is paying attention to that, so that if you are looking at the odds, and you're placing a bet on either yes or no, or buying those shares, you're taking that into account and accounting for that in the no odds. So that's kind of how we think about it when we're structuring. The other things are having like a close date or like a resolution date. And then to the next point is, setting things up so that, you have to set the odds to start the market, right? So it's trying to get as much data about a given market to figure out like, where should you set the odds, so that if you are providing liquidity, the market isn't immediately going against you, right? If you started a market right now for, will Donald Trump win the election, based on current markets and current polls, you'd probably set it at around 50-50. Whereas, after the unfortunate events at his rally in Pennsylvania, you might have set it at 75%, just because he shot up in polls and whatnot. So it's really taking into the context of what's going on and figuring out where do you actually start the odds at. And then if you are providing liquidity to those markets, how much liquidity do you want to provide? Is there going to be a fee for the market? What is the fee priced at? And that's part of market structure as well. So that's a lot of kind of what goes into the creation process, which is also why it is hard to have users make those markets, because of all these considerations and things that can be set. Obviously, we could sort of force setting of a lot of those things, or have some sort of template that people could kind of go by. But there are definitely a lot of aspects that can go into this and can affect, how a market is actually looked at or used, or how much volume goes off based on how people word things. So that's kind of on that side of things. And then for users, it's, looking at how much liquidity is there, what are the current odds, how much price impact will my position have, do I want to hold this till resolution? Do I want to trade this market? So definitely lots of things to think of. I think, like, for a novice user, the easiest way to think about these markets, at least in my mind, is really as a binary option, where you're buying that yes share or that no share for a certain price, with the expectation of potentially holding that market until resolution, and knowing that you'll be able to claim $1 for every share. So if you approach it that way, you can easily calculate your, potential profit, how long that holding period might be. So for example, if you're buying a election market share right now, you know that you're going to be holding that until roughly November 6th, probably, before you can redeem it for, $1 or it to be worthless. And so that's kind of like the easy way to start thinking about it. The other way that I've seen a lot of people look at the markets for trading them is around like sentiment, and how sentiment might change between now and then based on, are there debates coming up? Are there other rallies coming up? And could that change the sentiment for one candidate or the other? And they'll simply just trade shares based on, if there's something coming that, might make a candidate look better, the odds might move. And so they can make a quick, like, 10% flip on, buying Donald Trump shares at 49 cents and selling them at 55 cents. And then, with PolyMarket, they use an optimistic oracle. And so actually anybody can resolve those markets. And so that's another piece that users should be mindful of, is that there's been a lot of contention around some markets based on how they're worded. And so if there is ambiguity there, you run that risk of, could this market be resolved incorrectly? And so while we do want to ultimately go that route, it is tricky to kind of solve for that, because a lot of prediction markets, there's not just like an easy data feed that you can just plug into, or a price oracle like you can do with, the price of Solana or Bitcoin. And so some of it can kind of come down to the resolver's opinion onto how they interpret data. And so this will, probably always be a potential issue with these markets, because of the type of data that you are looking at. So while they are interesting, there's a lot of these little nuances that can affect how they trade, the outcomes, how they get created, and a lot of things to kind of control for, that I think a lot of people don't always realize.
You mentioned the oracles. I remember this was a big issue with PolyMarket with DJT token, where PolyMarket went against what the oracle resolved to, which was, I think it had something, whether or not the Trump team had something to do with it. The oracle resolved to no, and then it turned out that they did, a little bit later with additional information. How do you guys handle the oracle? Do you also use like an optimistic oracle like the UMO protocol, and do you see this approach kind of surviving long term, or do you think there needs to be more innovation on that front?
Yeah. So right now, our team handles resolution of markets. And so I guess my understanding is PolyMarket or UMA kind of does have this admin override as well. So if they need to, like, they can step in and basically resolve a market. We have actually built our own optimistic oracle on Solana that we plan to launch and leverage, which would allow other people to resolve markets. The main reason for this is it obviously takes the burden off of our team and allows other people to kind of play a role in this resolution process. as far as like longevity of these, I think it will always be kind of a crux of some prediction markets, and that's just because of like the long tail nature of these markets. Because you don't, like I was mentioning, like you don't have an oracle for some of these types of questions. So it comes down to, how do you interpret the news? How does the news interpret things to begin with? How do they present it to other people? And I think the most recent contentious market that has had a little, I guess, a lot of people talking about it on Twitter was recently the Venezuelan elections. I think PolyMarket put out a tweet one way, and then UMA resolved it the other way. And UMA does work. The way the optimistic oracles work is that you can propose a resolution. So anybody can go and propose a data resolution. And then if nobody disputes it, that's assumed to be correct. That's why it's an optimistic oracle. You're optimistically assuming that the data proposed is the correct data. If it does get disputed, it goes to a vote on UMA. So people with the UMA token can then vote on whether or not that is the correct outcome or not. And so a lot of people kind of complain that these oracles, just like with Ethereum, Bitcoin, Solana, you have these things where you could basically attack the protocol itself, because if you have enough money, you could buy enough tokens to just vote in the way that you want the outcome to go rather than how the outcome should go, which is where you almost need that admin override no matter what, because otherwise you could have somebody attack the oracle if they just accumulate enough tokens over time. There might be better ways to solve for this in the future. I think because this is, a small percentage of markets, I don't know if it's like a big problem that people are working on solving, and it still might be better to sort of have that central authority or even like a multi-sig wallet override at the end of the day. So if the community has a ton of, contention over a market, if it happens to be a bad actor, at least you can override it. If it's just ambiguity within the user base, I don't want to say this is the easy solution, but one thing to just remember is that if you are going to be a user betting in any of these markets, just like any user that's buying crypto because you're speculating on the price going up, having a background in finance, I would always look at any option or stock investment as my investment can go to zero, right? So if you're investing in these prediction markets, you should go into it knowing that this is the oracle that might resolve the market, or this is the team that might resolve the market, or this is the multi-sig that might resolve the market. There is always the chance that based on the market I'm betting on, there could be ambiguity or, contentions over how it should be resolved. And worst case scenario, my investment is going to zero. So I'm not going to overinvest because of those. So I should bake that into, my expected value for the bet. And, maybe I'm overthinking it, or, I shouldn't think of it this way, but just because it is kind of, I think it's also a small percentage of markets that kind of have issues. It's not super important, I guess, to solve for, which is why I don't think we've seen much change with that. So that's why we still have seen some sort of contentious markets over the last couple months, whether it's on, PolyMarket or even one or two markets that we've had.
Yeah, it's a difficult challenge to get through, isn't it? I just wanted to look back at the starting the markets again. Firstly, I think this is an awesome idea to have user-created markets. I think if you're thinking what's going to make prediction markets get to the next level and sort of help them really explode, and especially crypto-native prediction markets to help them get a foot over the regulated versions, yeah, I think this seems the obvious next step. So I think well on you guys for going for it. I was wondering for the creating the markets, you were saying the difficulty in terms of choosing the odds. I was wondering if you could do a sort of pump.fun type structure where you need a certain number of people to put money in and say the odds that they want to start the market at, or a certain amount of money that needs to be put in. So it could just be one person or 100 people. And then you average out the odds that they all said on a weighted version, just so it's, because I agree, if you're just like one guy and you say, oh, I reckon this is about 70%, and the bots come in, just instantly wipe you down to 50%. That would be a bit troublesome. So I think you can definitely have a lot of fun with the structure. And to me, it seems intuitive that this is the direction this needs to go. So I just want to point that out.
No, I think that that approach actually would be pretty cool. And I think going back to what I was talking about with like peer-to-peer or pari-mutuel style markets, you could do something like this, where you still have the implied odds of something happening. So like the way pari-mutuel works is people deposit on either yes or no, and based on how much money is deposited on each side kind of shows the implied odds. And so you could have a pumped up fund type situation where you could set up the market and you could deposit money on one side, but until X amount of funds are deposited overall or on each side, the market doesn't launch. And that way you have other people that kind of feed into setting those quote unquote initial odds. And then, it still gets tricky just because if you're letting people set custom questions, that can still be tricky. But like I mentioned, the beauty of the P2P and pari-mutuel stuff is that worst case is you mark it invalid and everybody just gets funds returned to them. Best case is the market kicks off and goes live and it's tradable and, you can win some money. So, the approach we're taking to start is that we are trying to, sort of create like a form or do it based on, crypto prices, sports, things where you can kind of pull in the data and you kind of just kick off a market with very little input from the user themselves. And so that way they can spin up their own markets without really having to think about the question and how it will be resolved or where it will get resolved. And that's what we're hoping to have live within the next month or two.
So with all this rising interest in prediction markets, a few weeks ago, maybe it was just a couple of weeks ago, Kyle Samani of Multicoin put out an interesting thread because they're just seeing a lot of deal flow in this category about their take on prediction markets. And it seems like the TLDR from their analysis is the key is regularity with respect to things that people can bet on. He mentions that DraftKings and FanDuel spend a lot on customer acquisition, and they basically lose money on these small dollar bets. The idea is you want to find people that are going to eventually bet 10,000 plus over their lifetime value. And so with prediction markets, it seems like they haven't found that PMF with respect to events that happen regularly. The closest thing is just the election cycle, which happens every 4 years, but that doesn't seem like it's durable enough to sustainably grow user base. So what is your reaction to some of this analysis? And do you see a particular market segment that could be well served by prediction markets?
Yeah, I 100% agree with this, and I replied to him with we're trying, like, I'm definitely thinking about that, and so I guess in a similar mindset, we've been just calling them internally evergreen markets, so markets that you can kind of have all year round that don't rely on, for example, an election cycle, and it's really like we know that after November 5th. What's next, right? Because right now, the majority of PolyMarket in the news is around election stuff. It's nothing else. And that's what most people are talking about as well. And I think they're exploring other things, but it's how can you keep going with that? And so I know like some things that you can kind of do regularly are movies or album releases. I think the quote unquote low hanging fruit is trying to tap into the sports market. But if you do go that route, how do you differentiate yourself? Or are you trying to build out the exact same thing that FanDuel and DraftKings has, right? The difference is if you do go down that route, then you have those players to compete with. And so you either need a differentiator or it could be a tough uphill battle. And then I think the other thing that, we have in crypto is speculating on crypto itself, right? Like people like clearly different ways to bet on things. And so whether it's looking at prediction markets as almost like a binary option market for crypto prices, maybe that's an evergreen or markets that can sort of be all times of the year, that can just like regularly happen and resolve on a daily basis, weekly basis, monthly basis. So these are all things that we're looking at as well as to how do we expand into them. And so I'd say sports and crypto prices are kind of our launching points, and we'll kind of go from there to see what people are interested in. And we're hoping that the other side of that is also just if we can figure out a way to streamline more of those custom markets and let people make their own markets, whether it's betting on things with friends but using our platform, I think like that would be fun as well. And to that point, I'll just briefly touch on the markets that we are looking at are basically like pooled parlays. So it's effectively parlays, but with a much larger audience of people. So you're all paying a flat entry fee, but then you're predicting the winner of every NFL game for a given week. And if you have the most correct predictions, you either win the entire pot or split it with the other people that have the most correct predictions. So that's something you can do for all sports, all times of the year, on any sort of cadence. And you could do a similar thing with crypto prices, right? You could say, all right, on Monday, everybody puts in their predictions for, what range will Sol, ETH, and Bitcoin be trading at on Friday. And then come Friday, whoever has the most correct predictions would win that bet. So it's just a different style, a different way for traders to get exposure to the market, a different way to just have fun. If it's a $1, $5, $10 small pool. And again, back to the permissionless nature, we're hoping to sort of set these types of markets up as well, where anybody could basically go in and one click generate the market every week. So it doesn't have to be us, and potentially give the creator of the market a fee for all of the volume that it drives. So it gives them an incentive to also promote and share that market with other people, and just try to continue to drive traffic that way.
I saw someone suggest esports as well, maybe as a vertical. Sort of gets overlooked by the major betting platforms, and obviously has a huge following. So yeah, I thought that was also interesting.
Yeah, for sure. I think it's really just anything that has some sort of a regular cadence, being able to apply it. And I think it also helps that if you go the route of something that does have already predefined rules and outcomes and dates known, it's much easier to make markets around, because you can, pull in sports or esports feeds from like an ESPN, for example, where you don't have to generate all of these markets. And then same thing with the resolution side, right? You don't really have to rely on an optimistic Oracle. You can rely on actual data from an ESPN type API endpoint. And then you don't run into, the issues of, is somebody resolving it correctly? So there are definitely benefits with finding those types of markets, and then, offering long tail markets that, people may want to just have fun with, such as, movies or music, or, what KOL will win in the influencer boxing matches at Breakpoint, right? So being able to offer those as well alongside of those other sports, I think just adds a little bit of differentiator that, a DraftKings doesn't have, right? You're not able to bet on your friends at a Breakpoint boxing match.
And then other people do talk furthermore about the risks of prediction markets. I think the classic one people use is if you're studying prediction markets around when certain people will die, then maybe it encourages people to kill them, basically. And then there was a tweet from Hasu like yesterday or the day before, and I didn't understand it. So I'm putting it out there and maybe you'll understand it. But he said, from a mechanism design perspective, I personally see the mass adoption of prediction markets as a threat to democracy and an accelerant towards plutarchy. So he seemed pretty sure about it. And I'm sorry, I can't really give you much more detail than that, because I did go into the comments to try and understand where his point was, and people seem to grasp it. But yeah, any thoughts on any further existential risks posed by prediction markets?
Yeah, it is interesting. And I think like, so that tweet by Hasu, it is kind of similar when you start looking at prediction markets and also using like futarchy. So basically like prediction markets are being able to bet on what will eventually be like a known outcome. So you're trying to predict what will actually happen. When you look at futarchy, it's basically trying to use markets to determine what is the best outcome. So it's more of like a sentiment market. And so like MetaDAO is what that is. So they're definitely adjacent. And so I think it's plutarchy, if I'm saying that right, or So that's kind of like it's using like wealth, right, to do things. And that's where, when it comes to crypto and like DAOs, right, any type of DAO proposal, it always comes down to voting with a token, and those tokens cost money. So you end up with a lot of voting power in the hands of wealthy people. And so like, I understand what he's saying, where with prediction markets, I have seen just interesting takes and tweets where it's like, okay, how much is being predicted versus how much is what we're predicting driving outcomes as well. And so it's it really depends on how you look at a lot of these things, and it's similar. Like even back when I was working in finance, I was a prop trader for about 2.5 years and traded U.S. and Canadian equities, and you can see how easily like stocks, let alone crypto, with some low market caps, can be manipulated by one or two individuals, whether it's a hedge fund or just an individual that has a lot of money. And so when you look at that type of stuff, like that can definitely come into play when you're looking at a futarchy type governance system or prediction markets, where you can just drive the price of a market, and then people are like, oh, this is going to be the outcome, so maybe I'm not going to go vote because Donald Trump has a 90% chance of winning. So if I was going to vote for Kamala, why even show up to go vote if he has a 90% chance? So just because somebody like starts to think that an outcome is so high, like likely to actually happen, it might influence their own decision to do or not do something. And so I guess like that is an interesting take. And so I think it just comes down to, I guess, how they end up getting used in the future. But that's also why I find them fascinating, right? It's being able to just look at data in a more numerical way. I feel like that's just kind of how I've always operated, coming from a background in finance, always being fascinated by how the banking system works, even if it is rigged in a lot of ways. But that's part of the system that we're in, right? So you kind of have to play by those rules, unfortunately. And so if you can have a way to experiment and play around with that, I always think it's fascinating. And when you can bring data into the mix, even better.
By the way, do you have a view on why we haven't seen the emergence of betting on, you mentioned media, like movies and music. What about also just general content creators, people on YouTube or even Twitter, for instance? I think I'm hearing about startups in crypto starting to attack these verticals for prediction markets, but this has all been around for a long time. Is there a reason why we just never seen that level of fandom for betting for media versus sports?
Yeah, I mean, I'm not really sure. I don't know if I could give a great answer there. In my mind, and I guess like my take, not to be like a Debbie Downer or try to say like, oh, this will never happen. But I think it's when you get to these long tail markets, there's just not a lot of liquidity or interest or information available, or like expertise, I guess. So like people having that information, and so if you have one or two experts, they're going to exploit all of the people that don't know much. And if those people are exploited the first time, they're probably not going to come back because it's a losing market for them, right? Like think of it if you could play one-on-one pickup basketball for money, and the only way to play was for money. You're not going to go against LeBron James knowing that you're going to lose every single time, right? You're going to stop playing against him because every single game you're just going to lose and lose money. So you're going to say, well, I'm not going to play anymore because I'm losing money. And so I think what we are starting to see is that we're shifting to potentially other market styles, where how can we still make it interesting and fun? And one thing that we did experiment with when we first launched back in 2021 were called no loss competitions. And so I think these could actually be more interesting for these types of long tail markets where you're not actually losing money, but now that there is actual and active DeFi on Solana and actual yield and interest rates, what you can do is you could basically be playing for the interest. And I've seen some other startups that are talking about these types of things, maybe not necessarily in this context, but for other applications. But it's similar to, staking with validators, right? Like you're never losing your soul, but you're earning interest on that soul. And so if we can kind of apply that same type of logic to prediction markets, then what we can do is we can say, well, if you just deposit USDC or deposit SOL, you can still like place your, one prediction on what you think the outcome is. And so if you're on the correct side, then you get a percentage of the interest that's earned, but nobody actually loses money. And so I think these no loss competitions could be a more interesting way to explore these. And there's actually, I don't know if they're still around, but I think it was called like Yada Bank. And they kind of did the same thing where they sort of gamified the yield, because interest had gone so low, especially in the US, that, you know, putting your money in a savings account, like it's like, who cares about 1% or 0.5%? Like it's basically nothing. So instead what they did is they took all of the interest into one pool, and they would basically run a lottery. So then like every month, say they have, you know, 10 billion in savings at their bank, even if you only had $5 in a savings account, you had the chance of winning the lottery of all of the accrued interest for that $10 billion. So it's like a much bigger pool that you're playing for. And you're basically just giving up that 0.5% yield, because 0.5% yield on, you know, $5 or $5,000 is pretty much irrelevant. And so I think like that might be a more interesting market for some of these long tail things. So you can still kind of get that gamified fun gameplay without risking your money. But based on the amount you have deposited, you basically just have a higher percentage of that yield that you would get back if you are correct. So I could kind of see that playing out, just because, you know, as we've seen in crypto right now, people are very PvP. Like meme coins are PvP, NFTs are PvP. You're taking money from somebody else in order to, you know, sell that meme coin or NFT at a higher price. And so if you're constantly losing, you're probably going to stop playing at some point.
It's a great concept, that, because especially the presidential election going on, people are going to have their money tied up for months and months and months. They could have just put in Sol, that could have been converted to an LST, and then, yeah, you could have just been playing for, 9% yield. So maybe they put in for 6 months. That could have been 4.5% yield that they're playing for instead, without risking actually losing the Sol. So I think it's a great idea, and definitely something you should pursue. Obviously, the elephant in the room is PolyMarket. You know, they are sort of dominating the industry at the moment. But I saw a tweet yesterday and someone said, I can't help but feel that PolyMarket is this cycle's OpenSea, and there's a Blur equivalent out there that will successfully vampire attack it. So what's going to make that Hedgehog?
Yeah, I definitely see that. So I think right now, we don't currently have any outright incentives to draw people to trade. So for example, with Blur, we sort of saw people knowing that they were accruing these points for a token eventually. And so I think, you know, right now, I think people are speculating on, will there be a token for PolyMarket? I think people are also being paid incentives. Like they have incentives for providing liquidity to their markets. And so we unfortunately don't have the funds to do that. So we are not paying out to incentivize liquidity. So we are looking into ways to do that, but we are also looking at alternative market types. And so we're hoping that if we can also draw interest in these alternative market types, while also being a more, I guess I don't want to say they're not, but I'm not exactly sure how their system is built. But from what I've heard from other people using the platform is you have to deposit into their platform and then you can trade in the markets. So I'm not exactly sure like what the context is with is what's on chain, what's off chain. But I guess we do like the fact that, or we take pride in the fact that like for our markets, you connect your wallet and you're buying those like yes tokens on chain. Like you're just interacting with the programs on Solana. Same thing with our pooled predictions, our pooled parlays that are coming out in the peer-to-peer markets. It's all just connect your wallet and you're interacting directly with those programs on Solana. You know, we're not personally like escrowing your programs in like one of our owned accounts, and you don't have to like request some withdrawal. If you win, you claim from the program itself. And so we're hoping that, you know, people like the way that that's structured. We have integrated yield into the USDC that's being deposited for our pooled markets and our pooled parlays and our peer-to-peer markets. And the goal is, because they are more short term, the interest for, you know, the specific user for that short time period isn't that interesting. However, we do plan to use that interest to basically give it back to the users in other manners, which is we are actually going to be introducing referrals, which is basically adding a referral to a Blink itself. So we're very interested and love Blinks. And so we're hoping that by bringing markets directly to people on the X timeline, it will, you know, drive more interest. And then on top of that, if people use your Blink to enter a market, you'll be able to get a percentage of rewards directly back to that wallet that is the referral itself. So just kind of more incentive mechanisms that go directly back to the user, and just try to get that as our flywheel that gets things going. And then also, leverage other potential things that I can't quite speak to yet, but yeah, we have some things in the pipeline that are coming.
Got it. Mum's the word. I think the Solana
Yeah.
piece as well is the other huge one. You've been here since 2021. Loads of people are on Solana already, whereas the big barrier for me, I've never used PolyMarket. It's on Polygon. And yeah, I just don't have any funds there, and it's too much of a pain to get there. So I do think if like Solana, it's likely that there is going to be a big prediction market at some point, and you're currently the market leader. So I think that's your other sort of feather in your cap.
Yeah. I mean, we absolutely love the Solana community. Like, there's just better and better tools that are coming out every day. We are hoping to kind of also drive the side of how can I get my friend that's not crypto native onto the platform. So we have, integrated tip link. I know you guys had them on the podcast a little while ago. And so like we have that like Google login option with tip link. The next sort of barrier there, which is not really our core product, but we're constantly looking for is if somebody does want to log in with Google, how do they then get funds to that Google Solana wallet? Can we pay their transaction fees in Sol so that they only need USDC? Or, do they still have to know to purchase USDC and Sol? And that's still a little bit of a hurdle. So and it is a hurdle because we are fully on chain. So if we are doing things in USDC, you still need Sol for the transaction fee or for rent for the accounts for those tokens when you buy them. So we are looking at that, but obviously we're starting with the assumption that, the first core users of the platform will be, people that potentially enjoy prediction markets and or sports betting, esports, crypto in the future, and will want to just connect a wallet and then go from there. So they already have that Sol or USDC and know how to swap it and do all of those things. It's obviously the low hanging fruit for user acquisition is to go with on-chain users already. But yeah, I think the Solana community and especially with the growth and, people actually that have used the chain and see how easy and smooth the user experience is compared to some other L2s or Ethereum, we think that definitely gives us an advantage as well.
Speaking of barriers, what about mobile? I think that's another missing link in this betting market, prediction market space is the lack of, at least as far as I understand, mobile options to use these products. What's your take on that? Do you guys have a strategy there?
Yeah. So we, with our polling app a while ago, we did build out a mobile app. So we did go through the whole, app store process, and the hardest part to solve for there is really that you really can't have a native mobile app for any of this stuff. If you do, you would effectively just be a KYC platform that has whatever license for whatever country your app is available in, and you would have to have all of that stuff in place. Otherwise, you're going to get rejected from the app store. And so you can't necessarily go that route, right? Unless you are fully regulated and can show the Apple App Store, the Google Play Store, those things, which is what the Solana dApp Store was trying to solve for. However, again, then your target audience is also only people that have a Saga, that have that like dApp Store installed, right? And so for us, it's really just designing our platform to make sure that all aspects are mobile optimized as well. So the goal is that if you do still have a Phantom wallet or Soulflare wallet, or if you do want to use the tip link option, you could just load our website in your wallet browser or just, on the browser on the phone and be able to log in and still do everything that you would do on desktop. So we definitely optimize and make sure that we include mobile designs for all of the pages. That way people can still use it on their phone. We could, I guess the next steps would be really going for like a progressive web app. So you could effectively bookmark our site as an app on your phone just for easy access. But I think we could deep link into your wallet still. So that is a possibility. It's just a matter of, where are the users? Where do we see most of them logging in? And, we definitely try to optimize based on those sort of metrics that we're seeing.
Yeah, that makes sense.
Yeah.
I mean, I think we covered quite a bit of ground here with respect to Hedgehog and the broader prediction market space. Is there anything else we should be looking forward to, or are there any other topics you wanted to cover?
No, I think we're just excited for the new market types that we're putting out. So we're hoping that, we're kind of targeting that shorter time frame, faster type of trading, which I think a lot of people are kind of accustomed to with meme coins and even NFTs, where they're, either flipping or constantly trading them. And so we are definitely trying to leverage blinks, referrals within those blink links, and then new market types. So as I mentioned, the one that we're really excited to roll out is our pooled parlays. And so we're aiming to get those live for the NFL season, where basically you would have, those weekly parlays where you can predict all of the games and then, move that into other things as well. So whether it's UFC, fighting where there's 8 matches in a day, you could do a 1-day parlay just for UFC, whether it's crypto prices daily or weekly, whether it's esports. I think there's a lot of applications for that. So we just want people that, might be interested in those pooled parlay type markets to just definitely keep an eye out for that. And then, if people have any feedback, I always love just hopping on calls to talk about prediction markets, to talk about Solana, or to talk about any feedback or suggestions for the platform. So definitely reach out to myself personally, or, just DM the Hedgehog account on Twitter.
Awesome. Well, Kyle, thank you so much for joining us and giving us this state of the union on prediction markets, on Solana and Hedgehog in particular, and super excited for what's to come.
Yeah, really appreciate the time, guys.